This is Rick Rule for Rule Investment Media, sponsors and producers of the Natural Resource Investment Symposium, July 23rd through 27th in Boca Raton, Florida. The purpose of this ongoing series of CEO interviews is to introduce attendees to the exhibitors that will be at the conference. Note there is a strong conflict of interest here. I'm a large shareholder of what was Metal Tiger and is now Strata, and in that sense, I am conflicted. This will give attendees the opportunity, as I say, to meet the CEO of the company and determine its investment attributes so that they can arrive at the conference properly prepared. I am delighted at this stage to introduce a young friend of mine, but a friend of long standing, Michael McNeilly, CEO of Strata. Mike, thank you for agreeing to this interview. Thank you, too, for your sponsorship and support of the Natural Resources Investment Symposium.
Thank you, Rick. You're most welcome, and thank you for your continued support as a shareholder as well.
Well, let's get into the history, both your own history, how it is that you came to be CEO, what you've done in the past, and also the history of what is now Strata that was formerly known as Metal Tiger. Give us where we were before we talk about where we are.
Sure. So look, I'm going to have to take people back to 2016 when we were a very different company. And to try and keep it brief, at that time, we were kind of a hybrid project generator / investing company. We did, however, have a very interesting asset in Botswana. We owned 30% of a project that ended up ultimately being sold to MOD, which then got bought by Sandfire Resources for 167 million Australian dollars in 2019. That asset just went into production last month, and at full capacity with the inclusion of A4 will do 55,000 tons at peak production per annum. So a very decent copper asset. Part of that deal, and one of the key assets that we have in our business, was we took a big gamble, a big swing when we sold our 30% to MOD Resources. I'd rather do one really, really good deal than lots and lots of bad deals, or even one bad deal. And I think we did a really good deal here. We managed to get a royalty as a result of that, over 2% NSR uncapped over about 8,000 square kilometers in the Kalahari Copper Belt. And that's basically surrounding everything outside of the 70 square kilometer radius of what is this now in production mine. And that's a key thing that we'll come to later in the value proposition. In terms of my background, I'm a corporate financier, economist by education. I've been the CEO of Metal Tiger for a little over 6 years, have taken it from where it was to where it is today with a balance sheet. We've just recently implemented a name change as well as a new investing policy. We've also shifted the company from London, where it will take far longer than we have in this interview to go through all the reasons why. But I would invite any investors to please speak with me as to kind of why that was quite a critical path. And we look forward to taking the company forward with this new investing policy that gives us a huge amount of optionality in order to drive strategy, and also improves dramatically our flexibility to execute on investments.
Let's talk about the value proposition offered up by Strata. First of all, of course, market cap, and then a description of the assets, including the so-called redundant or investment assets, the core shareholding that you have in Sandfire, and of course, the royalty package.
Yeah, absolutely. So look, we're at about 30.5 million Aussie. Our NTA, which came out today, unfortunately, it was down. That's largely as a result of Sandfire and Cobre, two of our larger assets, also having gone down as a result of the copper price falling in May, which is now likely started to pick up again. So the value proposition there, we're trading at 18 cents. Our net tangible assets are 31.14. Over the last 4 to 5 months, we've been hovering around 34 cents. So to put that in context, we're trading at a 42% discount to NTA, which means if we were to get back to where we are fairly valued, taking out all of our debt and everything, you're looking at a 72% uplift. That doesn't bake into the value proposition anything of what I feel about where the assets can go from here. And so we'll touch on Sandfire. So Sandfire, we have about 4.92 million shares. That's secured against about 550,000 of those are secured against a a 2.1 million collar loan facility with Macquarie Bank. The nice thing about that loan is we have another loan facility that will allow us to pay that back. That will get us an entry price to pay back that loan for those shares of about $3.88 a share of Sandfire. We're currently trading at about $6.18. So it's good business. The cost of capital on that loan to refinance it will be 17%. So we're going to make money there. So very pleased with that. And we've been doing that ever since. And the next big one will be in July. And there'll be another big one in December. So it's a nice way to generate some cash for the business. In addition to that, the rest of the shares are subject to about 10 million Australian outstanding. Not all of that has been drawn down. Some of that sits in cash so that we can take the opportunity to essentially buy it Sandfire when it's low and try and sell it when it's high. But it also gives us a unique financing opportunity in the sense that if Sandfire is trading very high, we have a lot of margin room. And actually what we could in theory do is cycle the cash through that to essentially finance things whilst also reducing our NTA. So in a world where Sandfire goes up dramatically, we actually have the ability to access a lot more capital without diluting you. It would lower the NTA as a result. There would be a cost to it, but because we actually have a derivative facility on the other side, in a environment where we needed to access a lot of cash to deploy into something that we liked, we have that flexibility, assuming the Sandfire price is high. In terms of, we also have 3 active investments, one of which I think is really, really exciting, and that's Cobre. And it kind of comes back to the value proposition, which is, look, we're kind of an interesting twist on how to play copper. If you think about our assets in a nutshell, now that's not necessarily where we want to go, but we have to respect the assets that we have as part of this transition and the royalty that we have, which we'll get to. Cobre represents basically the 3rd largest exploration portfolio outside of Sandfire and Cooper Canyon. This is, let me take you to Botswana quickly, of course. Botswana is ranked 10th in the rankings for, sorry, forgive me, I just forgotten the name. They're ranked 10th globally. Yeah, they're ranked 10th globally in the Fraser rankings, which is a tall praise. And they're the top one in Africa, which I think shows, and look, there is an election coming up next year, so that may change, full disclosure. However, Sandfire has just invested about 397 million. They've deployed most of that capital. They've already put 1 mine into production. Cooper Canyon is up for sale right now. South 32 has engaged bankers to put a bid in. Sandfire has also engaged bankers to put a bid in. That bidding process, according to the leaks in the press, you're looking at potentially a $2 billion US acquisition for a 60,000 ton per annum producer, which are the neighbors that can expand with about $700 million US of capital investment to 120,000 tons per annum. So there's definitely a lot of interest in where we are. It's a good jurisdiction. And Cobre, we own 19.39% of that. We also have a royalty over Cobre's ground. Cobre recently today came with some excellent news in terms of their Ngami project. Not time to go into it. However, I'll just hint at, they've sent away for met test work, and they're looking at acid leach consumption. So there may be something due to the unique geometry there that could be quite potentially interesting. And then finally, hopefully we'll be drilling soon at a doubly plunging anticline, which looks very similar to what we kind of had when we found T3. We've just completed, or are in the process of completing there, a drill campaign through RC just into the bedrock and taking soil samples, not soil samples, taking rock chem samples. And hopefully, given that's unique location on the basin margins, we should potentially get a result there. Cobre is currently bottomed out. It's at 8 cents. It's been as high as 70 cents in the last year. Any discovery there, let's say it went to 40 cents, we would be looking at about 22 million Aussie of value on that position. It's currently at about 4.5 million. So you're getting great leverage to upside in terms of what that can add to us. Forgive me if I'm running out of time. Southern Gold is another one that's bottomed out. We've just financed it. We've put in place a battery tech play. The logic behind that is we've transitioned there into critical minerals exploration as well as lithium exploration. And by adding in this battery tech play out of the University of Adelaide, we are trying to differentiate ourselves from a lot of the other 650 names in the natural resources space that are hungry for capital. It's well backed, and it's a very interesting place to be putting your capital into, and it shares a lot of similarities with the natural resources space, but there's not as much capital demand because it's slightly different. So we like that. Armada, which has obviously not been a great result to date. I stand by the fundamentals of the project. Unfortunately, this is in Gabon. It's a nickel copper magmatic sulfide project. It is drill ready. It needs a much larger budget than we can currently access. However, given the people involved, given our support, given the other shareholders, I'm very confident that we will see value from that at some point and in some form, and good projects ultimately either get drilled or they get farmed into. Outside of that, the rest of the portfolio, there's about 13 smaller names, which make up about a little over $1 million Aussie. And then there's a few larger names, more high conviction, a couple million Aussie that we like to go in and out of. And look, we do trade. We make no mistake on that because we kind of have to, because we need to cover our cost base. Our cost base has been coming down. We're hoping it will be under £2 million this year. It has been higher as part of the transition. And we're very, very focused on growing our NTA to make our cost base more in line with what you would expect. And finally, the royalty. That royalty is in our books at $14.5 million US dollars or 22 million Aussie dollars. Our market cap is 30 million. So if you strip out the royalty, we're basically trading at everything else except the royalty. So you're kind of getting the royalty for free. And the thing that's really interesting about that is I'm very confident that if I ran a process or if I phoned up a few people, I could get in excess of what we're holding that royalty on our books at today in cash. Now, we wouldn't do that because that would be a really silly idea and that we should actually wait for the timelines to pan out. So 12 months from now, A4 will be very, very close to having commenced mining. A4 is 113,000 tons. It's 9.7 million tons of contained copper. 9.7 million tons at 1.13% copper. And that will be being mined in about July, August of next year. And we're expecting the first royalty payments to come in on that in around Q1 of 2025, maybe a little bit sooner. And the nice thing is about 90% of the actual royalty income from that royalty comes in the first 6 years. We've modeled that on a 7% discount rate. I'm very confident that it would go for a much lower IRR. And the final thing I want to say is also on that royalty, there's also 20 kilometers away from there, an A1 discovery. Sandfire has flown an airborne gradient gravity survey for a very, very expensive amount of money, which they've also done in conjunction with Cobre. That will be completed and the results should be processed in and around September. A1 is within talking distance, and we have got no value for that. We've got no value for the royalty that we have at Cobre. And it only has a 10-year mine life, even with the A4 combined with T3. So Sandfire will be very, very hungry to add tons to that mill, and everything that needs to be added, we've got covered, unless they're able to buy Bonanza Canyon. But given the asking price, that may be difficult. They can always do a JV. So we're in a very, very good spot. And we're very
Mike, in the brief time we have left, we like our listeners to have a living, breathing contact at any company that they are considering investing in. Who might our audience talk to, and how might they reach that person?
Look, they can speak to me. And look, I think the best email to reach me on is info@strataplc.com. And look, obviously, I will have my contact details available elsewhere on the website, and I'm very happy to give out my personal contact details on a card. But for the time being, info@strataplc.com. I monitor that email.
Mike, thank you so much for agreeing to this interview. Thank you, too, for your ongoing support for the Natural Resources Investment Symposium. We look forward to hosting you in Boca Raton.
Thank you, Rick. Appreciate your time.